Good afternoon, everyone. We're just waiting for all of the participants to join, and we'll be commencing in a few minutes. If you've just joined, we're just still waiting for everybody to join the webinar, and we'll be kicking off in a few moments. All right, I think we might commence, although I can see there are still a few more joining. So anyway, welcome to Cbus's annual members meeting for 2020. My name is Robbie Campo, and I'm the Group Executive for Brand Advocacy and Product at Cbus. I'd like to start by acknowledging the traditional owners of the land. Our members and projects touch many parts of country where members and elders of the local Aboriginal community have been custodians for many centuries. We acknowledge their living culture and their unique role in the life of these regions. I would like to acknowledge that wherever you are zooming in from today, that we're all on traditional lands, and pay my respects to elders past, present and emerging. I would also like to acknowledge all other cultures that we have present here today. This is our first virtual annual members meeting at Cbus, although we have been running face-to-face members meetings in Melbourne and Sydney for several years. These meetings are a very valuable forum that we look forward to every year, not just so that we can report to you, but also to hear your views and suggestions. Ideas that have been put forward at these meetings have been implemented by us and have delivered positive changes for you, our members. Tonight you'll hear from Steve Bracks, Cbus's chair, and our new CEO, Justin Arter, who joined the fund in August this year. Welcome to you both. We also have in attendance our former CEO, David Atkin, who is leaving us after 13 years with the fund as CEO. Finally, I would also like to acknowledge Cbus's board directors and executives who are also in attendance. We also have the fund auditor in attendance. Tonight we'll run through a presentation that will highlight the year's key achievements. We encourage you to ask questions, and at the bottom of your screen there is a little icon for Q&A. And you can enter your questions through there at the bottom of your screen. We'll try and get to all of the questions you ask tonight, but if we can't, we will reach out to you directly in coming days via the email address that you used to register and provide you with the information that you've requested. We'll also be posting answers to questions asked tonight on our website with a recording of this meeting. We're not able to provide any personal financial advice though, and we're unable to answer member-specific questions in this forum, but as I said, we'll be very happy to follow up by email with you directly. We also have a number of questions that were submitted ahead of time, and we've tried to answer as many of those as we can in the presentation tonight. There are some additional issues that we will address in the Q&A section of this evening, and any that are more specific we will come back to you by email, as I've already mentioned. Moving to the next slide. As I noted earlier, this presentation contains general information only. It does not take into account your specific needs, so you should look at your own financial position, objectives and requirements before making any financial decisions. Any reference to performance of investment products offered by Cbus is not a reliable indicator of how they might perform in the future. It's now my great pleasure to introduce Cbus's Chair, Steve Bracks, and I'll be back later when we get to the Q&A section.
Thank you, Robbie. And good evening, everyone, and thank you again for joining us. I'm Steve Bracks, Chair of Cbus Super. I would like to acknowledge my fellow board directors here tonight and thank our sponsoring organisations, the CFMEU, the AWU, the AMWU, the CEPU, the ACTU and the Master Builders of Australia. Thank them for everything they do to help our fund continue to deliver outstanding returns and service for our members. Cbus is the leading industry super fund for those working in building and construction and other industries that build Australia. This year, we mark the 36th year of our fund. Established in 1984, Cbus was Australia's first industry fund at a time when super was only afforded to white-collar professionals, something our members are rightly very proud of. From the outset, we have put you, our members, at the heart of everything we do. For 36 years, we've been creating value for you by making sound long-term investments, by returning all profits to you, by providing solutions for a dignified retirement, by committing to the industries in which you work, by advocating on behalf of your interests, by providing tailored insurance at an affordable price, and by providing advice services to help you make informed financial decisions to support the retirement you want. We also create value for our society and the economy. We invest in our local economy, supporting businesses and job creation. We support the building and construction industry, and our buildings and other investments contribute to lower carbon emissions. We identify what matters to our members and other stakeholders by asking them. The feedback helps us deliver for you. You can see the top 5 issues here on the screen. Members having enough income in retirement, strong, reliable and trusted fund contributing to an effective super system, long-term, responsible and innovative investment, meeting member and employer products and service needs, and getting the right help at the right time to make sound decisions. Tonight, Justin Arter, our Chief Executive Officer, and I will talk to you about how Cbus is delivering against each of these key areas. But first, let's take a look back on what has been an extraordinary year. Despite the many unprecedented challenges of the COVID-19 crisis and volatile investment markets throughout 2020, the growth, that is the Cbus My Super option, finished in positive territory, returning 0.75% for the 1920 financial year. This compared favourably to the negative median return of the largest 50 balanced super funds, which was minus 0.82%. Importantly, we continue to be a top performer amongst our peers over the longer term. We recognise that many of our members, particularly in Victoria, have been hard hit by the economic impacts of the various lockdowns and restrictions. While some parts of the building and construction industry kept working throughout the pandemic, others were forced to shut down. Cbus's primary focus was on supporting our members. We were able to redeploy resources and technology remotely within 48 hours to continue to assist members access our advice team. And we introduced a chatbot online to assist in streamlining inquiries at a time of high volumes. As of the 26th of October, we have paid out nearly $2.2 billion in early release payments to more than 262,000 members. During 2020, Cbus Property continued its strong performance through the pandemic due to long-term leases and secure tenants, which includes 40% government occupancy. We are also well positioned to play our part in investing to create jobs in the building and construction industry and beyond, to assist Australia on the road to post-pandemic economic recovery. Since March 2020, we have committed over $950 million to Australian businesses through equity raising, debt finance and project financing to support Australia's economic recovery. An extra allocation to the Cbus debt portfolio means Cbus now has a further $850 million in additional capital to invest in companies and project finance. We've also made considerable investments in social and affordable housing, an issue our members raised at our last annual members meeting last year, and they asked us to follow up on, including a game-changing pilot program in New South Wales that will get even more social and affordable housing into the market, as well as generate construction jobs in our industry. It's been a big year, and it's unlikely to let up in the 12 months ahead. The legislated increase to the superannuation guarantee kick off next year, with an increase of 10% on the 1st of July 2021, and then continues to increase until it reaches 12% on the 1st of July 2025. That's money you should expect in your super account. We know that our members need these increases in order to sufficiently build their retirement savings. The federal government's support for these super guarantee increases is crucial. I'd also like to take this opportunity to strongly argue that any changes made by the government to the super system should be in the best interests of the members in the system. One of the changes announced in the budget was a change in the rules about where workers' super gets paid if they don't choose a fund themselves. Currently, if you're working in building construction, you will typically be defaulted into Cbus. But the proposed changes to default rules mean that workers will stay in whatever fund they first join, and many of these funds will have insurance you can't claim on if you're working in hazardous environments like building and construction. So the law should be written so that workers aren't stapled to funds that turn out to be inferior. They should also ensure that building and construction workers can be certain that from their first day on the site, they're covered by a fund that is going to provide them with insurance they can claim on from the start. We also strongly support that only super funds which are the top performing should allow to continue, but there must be a level playing field in super. Funds must be compared by net benefit. That's investment returns after all fees and costs. That's about transparency. Industry super funds like Cbus are strong long-term performers that build the retirement savings of millions of Australians. Now, let me tell you exactly how Cbus has done this for you. We have $54.16 billion in funds under management. This is up by about 4% on last year, but was impacted by the global markets and the early release scheme withdrawals. As I said, our returns last year were 0.75% positive. We now have an annual average return rate since inception 36 years ago of just under 9%, an incredibly strong result. Cbus Property had a return last year of almost 7%, and their annual average return since inception in 2006 is a staggering 15%, again very strong. Some of the key stats for you. We now have more than 758,000 members, up by 2.5%. Our employer numbers are up by 7.5% to nearly 158,000. The average member account balance is around $65,000, and the average super income stream member account balance is around $280,000. As you can see, the fund is in a strong position. Before I hand over to Justin to go through more detail, I'll first acknowledge our outgoing Chief Executive Officer, David Atkin. Over the last 13 years, under David's leadership, Cbus grew from $12 billion in funds under management to $54 billion to become a powerhouse industry superannuation fund. Under David's watch, Cbus investment performance has been up in the top 5 funds over the last decade, and we consistently rank in the top few funds on trust and satisfaction, which is a clear endorsement of the members first culture David has driven. This year, we also said goodbye to a long-serving director, Glenn Thompson, who served as a trustee since 2000. I thank both of them for their service. I now am delighted to introduce to you our new Chief Executive Officer, Justin Arter. Justin brings 3 decades of experience as a CEO and senior executive in government and investment sectors. Justin is well placed to guide Cbus in the future, and I must admit that we were thrilled and pleased when Justin said that what attracted him to Cbus was the laser-like focus the fund has on its members' best interest. I will now hand over to Justin Arter to delve into the highlights of last year. Justin.
Thank you, Steve. I'm very excited to be here at my first annual members meeting, and thank you all for your attendance this evening during these difficult circumstances. Hopefully next year we might be able to meet some of you in person. But let me say at the opening, I'm delighted to have been appointed the CEO of Cbus. I'm stepping into the job during a very dynamic time, but what I'm seeing from the outset gives me great confidence that Cbus, with our strong commitment to members, will confront the challenges ahead and will continue to strengthen our position as the leading super fund for workers in the construction industry. Let's start with the numbers. Steve given you a taste of those, but what you can see here is that Cbus consistently outperforms. 2020 has been dominated by COVID-19 and its impacts on the world from both a health and an economic perspective. Until the last week of February this year, 2020 was looking like a reasonably good year for investment returns. Then share markets across the world, including here, fell fast and a long way before starting to rise again towards the end of March. As you've already heard, the growth, or Cbus My Super option, delivered a return of 0.75% for the full financial year. Now, I know that doesn't sound like a large number, but only 15 funds out of the 50 that feature in the Super Ratings SR50 Balanced Survey delivered a positive return for the financial year. As you can see here on the chart, the median return was minus 0.82%. While 0.75% is a low absolute return, it's a big turnaround from the end of March. At the end of March, the growth option had a financial year-to-date return of just under minus 6% against a median return of minus 6.7%. Looking at the longer term, given super as a long-term investment, you can see Cbus's strong performance. The investment objective for the Cbus super option is CPI, that is inflation, consumer price index, plus 3.25% over 10 years. And this figure at the 30th of June was 5.17%. So our return of 8.54% has delivered 3% above its objective over the last 10 years. This is a great result for members over the longer term, even when facing challenging short-term investment conditions. Heading into February, the team were managing funds that were moving quickly towards $60 billion. The large share market falls saw this reduce to under $50 billion by the end of March. And as Steve said, we finished the financial year with just over $54 billion in funds under management. The investments team has done an amazing job this year in some incredibly challenging circumstances. It's a credit to the strength of the internal investments team capability that we've built at Cbus over the last few years. But what does this mean for your balance? Let me show you on the next slide. You can see here how our strong performance makes a big difference to your retirement. On the chart here, a model here of a $50,000 balance and a $100,000 balance. And if I'd ask you to look to the right-hand side of the slide, given that super is a long-term investment, you'll see there that for a person with a $50,000 balance, they've been just over $18,000 better off having their money with us here at Cbus than they would be in that SR50 balanced index that I talked about just a moment ago. For the person with the $100,000 balance, of course, the number is even larger, nearly $30,000, just under $30,000 better off than they would have been if they'd been in the SR50 balanced index. Next slide, please. Let's talk for a minute about the Retirement Readiness Index. In addition to showing you how much better off you are with Cbus, we also provide a Retirement Readiness Index that measures the average expected income in retirement against a target income. To calculate this, we draw on our own research and the Association of Superannuation Funds Retirement Standard. We look at a range of income sources, including super and the age pension. Target income for our members in retirement is $30,473 per year. We aim to see 70% of our active members at this level. As at the 30th of June 2019, 70.1% of our members were on track to achieve this, and that's above the level of 62.3% reported in 2018. We're continuing to send members retirement income estimates with their end of year statements, and our aim is to increase the number of members who receive them. These estimates show the regular income super can provide in retirement and actions members can take to get better outcomes. It's also important to us that we can ensure that we offer products that work for you no matter what stage you're at. Now I'd like to show you our new ad campaign, and I think it demonstrates this.
Hi, Dad.
What time do you call this?
Some things don't have to change. With as little as $80,000 super, Cbus Super Income Stream works with the pension.
Hi, Dad.
So you'll still have that steady paycheck.
Come on.
Even after you retire.
As I said, we want to ensure that Cbus members understand that we have great products that work in line with the age pension, and we have advice services that can help you make the best decisions for you and your family. At Cbus, you can stick with us for life. I'll now take you through how we deliver for our members. 4 years ago, Cbus decided to start to bring more of our investment management in-house because we're big enough now to be able to get better outcomes for our members by doing so. Our investment model has delivered strong performance and a significant reduction in costs, equating to strong net returns for members over the past 4 years. One of the key benefits to members is over $150 million in investment cost savings in fiscal year 2020, the one we've just concluded, with $135 million of that for members in the Cbus MySuper option. That's millions not being paid to external fund managers or service providers. And on strong performance, the global equity strategy has returned an average of 19.53%, outperforming the index by an incredible 9.92% since inception to the 30th of June of this year. This is a remarkable result. We're currently managing just over 30% of our assets in-house, and by 2025, we expect to manage more than 40% of assets, including Cbus property, internally based on current projections. Our responsible investment approach is also important to us. Our approach to issues such as decent employment and labour rights, occupational health, safety, and mitigating climate change is important in terms of protecting and growing our members' retirement savings. We're guarding the value of their investments against such risks. It's not altruism nor activism, it's economic good sense. We have a comprehensive climate change roadmap that will guide our actions over the next 2 years. And in August this year, we announced our commitment to a 45% reduction in portfolio emissions by 2030 and a commitment to net zero greenhouse gases from our portfolio by 2050. Unlike other funds, we haven't announced that we'll be divesting from fossil fuels. What we are doing is filtering out potential fossil fuel stranded assets and companies while still providing capital to companies that are moving towards zero net emissions by 2050. Our investments are also contributing to the COVID economic recovery. Construction and the building industry will play a major role in what will be a long nation-building recovery. Cbus recognises the opportunities to work with our key sponsoring organisations to support a pipeline of work across the industry and provide financing and other long-term lending where it stacks up to get projects off the ground. We'll work closely with federal and state governments as we're committed to maintaining and creating jobs through investing in the recovery. And as Steve mentioned, we've committed over $950 million to support Australian businesses so far. And we also have another $850 million to invest in project finance and supporting quality companies over the next year or so. Let's turn to Cbus Property. Cbus Property continues to be a success story for Cbus. As we've already said, Cbus Property returned just under 7% for 2019-2020, with an average annual return since its inception of 15.26%. We're also proud to report that over 100,000 direct jobs have now been created from Cbus Property developments since 2006. As you can see here, we have some updates on key projects. We've had some big construction projects such as Collins Arch and 311 Spencer Street Police Facility in Melbourne reach practical completion. There's plans underway for new developments in Brisbane, Burke Street in Melbourne, and the former David Jones site in central Sydney. And they have a new development kicking off in Adelaide, a 20-storey A-grade office building at 83 Pirie Street in that city. This project is estimated to create over 2,000 direct jobs during its construction. One of the reasons for Cbus Property's success is the quality of its developments. Cbus Property was rated second globally for the 2019 GRESB survey, which is a phenomenal result. We're waiting to see where they land for 2020. Now I want to talk about member services. Earlier, Steve noted that we ask our members what you want from us, and we're committed to delivering on that. Over the past year, the Cbus Accelerate program has been finalised and now delivers a fund-owned technology experience that aligns to changing member and employer expectations. We're doing a lot of work to improve our digital tools like portals, and we'll continue to build this over time. Face-to-face servicing is a Cbus point of difference. Our team of 27 Cbus coordinators visit worksites daily, educating members and building financial literacy. During the year, our coordinators presented to more than 2,600 groups, assisted members at 190 events, and conducted over 11,400 member appointments. Although coordinators continued to conduct toolbox meetings and member visitations on site where possible, during the COVID-19 lockdown, we've initiated the use of Zoom to carry out briefings. Members and employers accessing our front counter service in 5 major cities continued to increase, with 10,103 member interactions conducted this year, an increase of 63% compared to last year. We offer translation services through our front counters and on work sites in 11 different languages for members whose first language isn't English. The Cbus hotline, dedicated to our Indigenous members, who we know have challenges providing the identification required to find their super, has had over 15,000 calls from members who identified as Aboriginal or Torres Strait Islander. And insurance is very important too. Our members want high quality life and TPD cover, and we provide it. Our members would find it very difficult and expensive, in fact, in many cases impossible, to get life and total and permanent disability cover in the retail market. For example, most of our members spend part of their lives working at heights. Our policy covers this. Most retail policies specifically exclude work at heights. Claim acceptance rates at Cbus have been very good, with 96% of all insurance claims accepted over the past 5 years to 30th of June 2020, and 94% specifically for total and permanent disablement. On advice, we provide advice and education for members throughout their working life and then in retirement. Cbus's team of advisors aim to assist members so they can manage their super and maximise their retirement outcomes. To give our members the best chance in retirement, we encourage them to seek advice through our team, make additional contributions, and choose an investment option that's appropriate for them. Finally, making sure our members get their money. Unpaid super is a really big issue in the building and construction industry. During the year, we recovered a total of $101.7 million in unpaid super for our members, compared to $99.6 million in the previous year. As I said, meeting our members' needs is our priority, and meeting the needs of members facing financial difficulties as a result of the pandemic and in accordance with the expectations set by the government through its early release scheme was a priority this year. We ensured that withdrawals through the government's early release scheme were met, and 97.7% of those were paid within the 5-day timeframe. We worked to inform our members on all the options available to them and the implications of future monetary loss when accessing their super early through our advice service, our sponsoring organisations, our coordinators, our front desk hotline, and our online communications. A significant amount of work needed to be done quickly in the background to ensure there was enough liquidity available to meet switching and an unknown amount of early withdrawals, but also to minimise impact on equity for members who didn't change investment options or withdraw funds. The total number of applications from all funds, that is all super funds, at the 11th of October 2020 stood at 3.3 million, with repeat applications after the 30th of June this year reaching 1.3 million. A total of $34.3 billion was paid out. And as I've said, we paid out nearly $2.2 billion to more than 262,000 members. We stand ready to assist our members, but we're concerned about changing the long-term savings nature of super. It is, after all, the long-term benefit that builds retirement savings. As Steve has flagged, we remain concerned about whether the government will remain committed to the legislated increases in the super guarantee. Undermining the long-term nature of super has a range of consequences, including severely impacting member balances, noting that Cbus members already retire with significantly less than the average, and it also impacts our investment capacity if money isn't available to be invested for the long term. Construction workers were the first to win super in a visionary move that was followed by the rest of Australia. Some of you here tonight might have been around when Cbus was first set up. We want to see the super sector continue to mature and deliver on its promise of affording a decent retirement to all Australians in combination with the age pension. The focus of our advocacy is on ensuring the unique circumstances of Cbus members and the building and construction industry is taken into account in any policy or regulatory changes. With that in mind, we know how important our insurance is. And as I said earlier, our members want high quality life and TPD cover, and we provide it. So we'll strongly advocate against any changes that will compromise outcomes for our members. There were two big changes over the past year. Protecting Your Super came into effect on the 1st of July of 2019, and it meant changes to fees, the regular transfer of low balance and inactive accounts to the tax office, and cancelling insurance for inactive members. Putting members' interest first took effect on the 1st of April of this year. Much of this was unfinished business from Protecting Your Super that the government continued to prosecute after the election. It meant cancelling insurance cover for low balance members, default insurance cover for members only where their balance reaches $6,000 or they're over 25 years. Members could still apply for cover by opting in. Cbus successfully engaged with the government for an exemption for younger members working in high-risk jobs. Manual workers in construction and building will continue to be covered by the fund's default insurance. This was another example of Cbus securing an outcome for our members because we know it matters. This is the approach we'll be taking with the changes the government has proposed in the recent federal budget. While we hope a sensible and pragmatic approach can be applied, we'll ensure the unique circumstances of building and construction workers is understood by those making our laws. Now I'll take you through some of those changes. The government announced a series of changes in the federal budget. The first of these was stapling or dismantling of the industrial default system. This means you get stapled to your first fund. This means people that start a job on a construction site will no longer automatically default into Cbus. This means you'll be paying for insurance which actually won't cover you or your families because most funds exclude the hazardous conditions which Cbus's cover has been tailored for. We're very concerned about this. I'll also point out that we're very concerned about anti-hawking. We get many concerned calls from members who are approached by retail funds, ringing them up, trying to get them to switch. Complaints have been made to regulators, but the government should just pass the legislation to make this behaviour unlawful. The next one is the Your Super comparison tool. This is an online portal allowing people to compare super funds and products. This sounds like a great idea, but it has to provide consumers with the one figure that really matters, what each fund delivers after all fees and costs have been deducted. The current proposal is to tell you about fees, which tells you about what you pay for, but not what you get for them, or what you get in returns, but leaving out a lot of the fees that are actually paid. This leaves out the most important measure, investment returns after all fees and costs. We also think insurance should be included as a measure because for Cbus, this is an important part of what we provide. There's a lot more detailed information on our website if you're interested to read more. Cbus will continue to advocate on behalf of our members. Our focus is on ensuring any changes take into account the unique circumstances of building and construction workers. It will be critical that we work together to ensure industry funds like Cbus that provide outstanding long-term returns and tailored insurance can continue. All of these changes are accelerating fund consolidation. Cbus is in a very strong position, but growth remains a strategic imperative in order to continue to deliver better outcomes for our members, including lower costs. We're committed to never losing sight of our heritage and strong building and construction connections. In June, Cbus and Media Super, the industry fund for the media and printing industry, signed a memorandum of understanding and have started due diligence on a joint arrangement to be in operation in 2021. We're looking at other opportunities to grow the fund and maintain our strength and ensuring that members remain at the heart of everything we do. Our focus in the year and indeed years ahead will continue to improve our service to you by strong long-term returns to grow your retirement savings with advice that's easy to access and helps you make the best decisions, with tailored good value insurance and an overarching commitment to our industry. Contributing to our economy and community through investments and supporting jobs is very important to us. That brings me to the end of my presentation. Like Steve, I want to finish off by thanking David Atford for his contribution to the fund over the last 13 years. David will be pursuing other interests and we wish him all the best, but his legacy at Cbus on many matters, such as gender equity, diversity, and commitment to members' best interest will continue and strengthen. Now I'll hand back over to Robbie for the question and answer session.
Thank you, Steve and Justin. We hope that you found this presentation informative. Before we get on to questions, I'd just like to cover off on a few actions that arose from questions last year. Some were answered over the course of our presentation, but there are just a few others I'd like to cover off on. Firstly, we had a request at an annual members meeting last year that Steve and our CEO visit some of our work sites. This is an ongoing priority for us, but unfortunately, despite our best laid plans, COVID has made site visits impossible for the time being. Once we can, we'll get back on site and you will see Justin and Steve out there. And I know in particular, Justin is very keen, having joined the fund only after the COVID crisis had already commenced. We were also asked by members to look into the Victorian government wage theft inquiry. We know that unpaid super is a huge issue in our industry and it is a priority for Cbus. As a result of the request made by members, we made a submission to this inquiry and attended a roundtable. As a result of the inquiry, Victoria has introduced laws establishing penalties for employers who underpay or don't pay their workers. We know that unpaid super is a problem not just for our members, but also for our employers, as the non-payment of super creates an unfair situation for employers who are paying their super contributions and doing the right thing. Last year, we also had a request for more coordinators on site and the ability to access Cbus advice services also on work sites. So we have delivered this. We've employed 2 more coordinators this year, one in Victoria and one in New South Wales. Our coordinators worked with our advice team to ensure members could access advice services on site. This is obviously still evolving and has been impacted by COVID, but we have ensured that we continue to provide information even during these times through simple, quick videos and also through facilitating meetings over Zoom like we are tonight. Now, we have had some questions come in and we also have received quite a number of questions from members who, when they enrolled to come into the webinar. So we might actually start with some of the questions that were submitted ahead of this evening. So the first one is for you, Justin. We have a question from a member. What value does Cbus's advertising add to our performance?
Well, thanks, Robbie. Cbus operates in a very competitive market. To continue to service the retirement needs of building, construction and allied workers, we need to achieve scale so we can create benefits like low fees and the great long-term returns I talked about a few minutes ago through higher quality investment opportunities. To this end, we need to acquire members and retain the ones that we've already got. Advertising plays a key role in achieving these 2 outcomes. We monitor our advertising investment for effectiveness and of course value for money on an ongoing basis. We look at retention and acquisition rates and use independent market research to ensure the money is invested well. We're confident that having a strong brand has played a significant role in the success of Cbus to date and will continue to do so in the future.
Thank you. Steve, this is a further question that we received in advance of this evening, and it comes in from a member. How did you perceive the Minister's recent comments on industry super funds promoting themselves as economic and company mainstays in the Australian economy?
Well, I think it's important to build confidence in Cbus amongst our members. And clearly we are a big investor. We're investing in the real economy, in property and infrastructure, in a range of nation building activities. And we're there, we're investing for a reason, that we're getting good long-term returns for our members. And this helps by promoting that, by advertising that. It helps with retention of our members in our fund because they believe that we're doing the right thing and therefore want to stay with us. And secondly, it helps attract new members. And as Justin said before, that all means benefit to members. By attracting new members, by retaining members in our fund, it means that we can do things at a cheaper price by having a larger membership and by serving our members better. So it's got great benefits really for our fund and we're going to continue doing it.
Thank you. We have received, prior to this evening, a number of questions that relate to how you can make contributions and the types of contributions that can be made. We'll email the members who have made those, ask those questions directly so that we can give you more detailed information that's accurate. And of course, I'd also like to remind you that if you would like to speak to one of our phone-based advisors, they can provide you with one-on-one guidance around how you can best make contributions into the fund. So the next question is one, I think, for you, Justin. How does Cbus intend to engage with retirees who are no longer in the workforce?
Well, Cbus already engages with our retirees in many ways and is focused on trying to engage in a more effective way, as I think we've got a really good retirement product. In fact, we have a number of marketing campaigns targeted at pre-retirees so they can get an understanding of all we have to offer prior to retirement. The main ways we engage currently include communication through mail, email and phone calls, and I'm sure members dialed in tonight will be familiar with those. Retirement seminars that both members and their spouses can attend nationally, being completed in Zoom in the current environment, as you could appreciate. Inbound calls, predominantly through the advice team that we've referred to already tonight, and specific publications aimed at retired members.
Thank you. The next question is one which I think is quite topical at the moment, and it's come in from a member. Again, this is one of the questions we received prior to this evening, and it asks, how do I apply for hardship? And Justin, I think that's again one for you.
Okay, thanks, Robbie. Look, in certain situations, you're allowed to withdraw your super early, as I'm sure people are aware. If you have unrestricted, non-preserved money in your account, you can withdraw it at any time. Otherwise, you might be able to withdraw your super early in the following circumstances. The first is part of the COVID-19 early release scheme that we've talked about tonight, but that does conclude on the 31st of December of this year. Second, under severe financial hardship. And third, on compassionate grounds. Now, certain criteria must be met to be able to access your super early. And for more information on that, rather than me take up scarce time here, Robbie, I think you could see the early access to your super section of the ATO website, or call our contact centre, who'll be able to guide you to the most appropriate option.
Thank you. So another question that came in ahead of this evening, and again, Justin, I think this might be one for you. Should Cbus have a special category or option for members over 60 years of age, instead of those members being in the growth area of the MySuper product?
Thanks, Robbie. Well, balances for older members are growing, and we'll continue to consider what the settings that are right for all of our members. There's many members who still find that to be true. There's many who could benefit from a different level of growth assets or another protection mechanism. We're looking at how our members approach retirement currently. It's actually a very interesting live issue we've got here at work, and this is in really strong consideration at the moment. But please, Cbus does offer currently a range of investment options today, which members can select from, that may not necessarily be the higher growth one.
We have a number of questions that we received ahead of this evening in relation to our investment performance and investment approach. And so we have sought to answer most of those through the presentation, and we did provide quite a lot of information about our investment activity. So we will be posting the presentation on the website after this evening, and we'll also be responding to any member who submitted a question. There are a few additional ones that go into a little bit more detail, so we will answer those this evening. So firstly, and this is one for you, Steve, I think, is Cbus planning on moving investments away from traditional construction investments and into more widespread markets?
Well, we already invest in a wide spread of markets. In fact, in relation to property, I think we invest about 11% or thereabouts of the fund into property, about the same in infrastructure, about 11%. And we do that because it's giving us good returns, good long-term patient returns, which is what we want for our fund. And a lot of that 11% is in Cbus property. It's one of the best performing property companies in Australia. It's wholly owned by Cbus. It's one of the reasons why, for example, that Media Super wanted to merge with Cbus, was because we had that high performing asset as part of our fund. And I should add here that, Cbus is still going to be Cbus after the merger. We'll still operate as Cbus. Nothing will change, nothing will be different, and we'll still, have our brand and our operation the same. But the reason we do that, the reason we invest in property is because we want to get good returns for our members. But we do spread. We have a lot on the listed market in Australia. We have money on the international markets. We invest in private equity. So we do have a spread. And so that means that at any one time, we've got assets which are highly performing and can perform well in return to our members as well. And it's probably why, we've had such superior returns over such a long period of time, because of that spread we have right across the economy, both here and internationally.
So there are a couple of questions that are kind of related to those topics that have come in through the live Q&A that members have submitted this evening, Steve. So I might throw them to you right now as well. Has Cbus taken the opportunity to take board positions on major Australian industry businesses that are publicly listed?
No, we haven't. We don't do that. But we do, of course, through our holdings in public companies, influence behaviour and outcomes, and that's really important. So we engage. We make sure that we've got good, sound investments on governance, on environmental sustainability, on industrial compliance issues. That we make sure that all our investments are adhering to those issues, and we engage with our company significantly in that as a shareholder. And that's the best method, we believe, of making sure that we have good, long-term, sustainable growth assets in our fund as a result of that.
Thank you. And a further question that's come in on the live Q&A. How is Cbus Property responding to issues with retail and commercial tenants caused by COVID-19?
A very good question. And, who would have thought we'd have this shock that has been a result of the COVID-19 pandemic? And it has and will affect significantly both office and retail accommodation. There's no question it will, but we'll adapt and we'll make sure that we have the right settings going forward. We will still need significant residential assets going forward, and we'll make sure we have those in the right place, in the right location, and also that make sure that they're ones that are high performing. We are in a strong position because only 5% of our exposure in properties in retail, and it's usually an ancillary retail associated with our existing properties, our office developments or others. And so we probably won't be as significantly affected as some other property companies in that regard, because retail is going to be under significant pressure going forward. Reduced demand, restrictions on we've seen already on what's happening. But we will certainly take account of that and make sure that our investments are suited to the economic environment going forward. And we're already making that shift currently in relation to Cbus Property, and would expect our other property investments to do the same thing.
Thank you. I'll now ask a question that was pre-submitted by a member ahead of this evening, and it's in relation to some of Cbus's investments in China. And I think, Justin, this might be one for you. So the question is in relation to why Cbus is investing our money in Alibaba and Tencent when we know these companies have links to the Communist Party in China. So the member's question is just in relation to the rationale for that investment and why we're doing so.
Yep. As Steve said in the previous couple of questions there, Robbie, we're constantly monitoring our investments in companies to ensure we remain aligned with members' best interests. So we regularly engage with all the companies, whether directly ourselves here in the domestic market or through third-party service providers, typically overseas. And in general, we engage with companies to improve their understanding of them, their oversights, their practices and their disclosures. That's what we're very interested in. We also use these engagements to gauge whether our reviews, our positive view remains warranted. And Alibaba and Tencent, the two companies you talk about, are both strongly performing companies with strong prospects going forward. And the recent engagement we had with them included discussions about climate change, artificial intelligence, human rights, modern slavery, and other environmental, social and governance issues. And we were satisfied with the answers we obtained at that time. I think it's also, I'd like to clarify that our position in those companies at the end of June was about 1.28% of the total fund.
Thank you. Steve, I have a further question that was pre-submitted by a member. Would Cbus look at some social housing projects? A lot of our members have a great interest in seeing us invest in social housing. So I think we did cover off a little bit on that topic in the presentation, but perhaps talk about a bit more detail.
Absolutely. And it's been an issue on getting the right rate of return for our members and the investment in relation to social and affordable housing. And we're very pleased that we've now got a formula going forward in which we can do that. We've got away a project in New South Wales where the government has offered the land as a contribution towards that project. That defrays the cost of it, and we become the developer using existing government grants which are there to lever up and make sure that we get the right return for our members as a part of it. So we've found the formula. We've got this project underway in New South Wales, and now we're going to try and roll that out in other states as well, that same project. And we've had discussions already with the West Australian government, the South Australian government, Victorian government, on how we could go about doing that, because we think there's a formula there to do it. We have got an excellent investment which is now off the ground and going, and we think this can be an immediate job generator as well, but also a good return to our members as part of this as well. And it's something which is needed as well, which is important. So yes, you know, we've cracked the nut now. We think we've got the right formula going forward, and we're going to try and roll that out across the country.
Yes, and I know when we announced that pilot, there was a lot of attention and interest in the model because it is really providing a much more repeatable way of undertaking that investment that will provide us with what we need from an investment perspective, but also be delivering great outcomes in terms of social housing. So we talked a little bit in our presentation in relation to what the fund has announced in terms of our climate roadmap. We did receive a question from a member ahead of this evening that asks about our track record in terms of green renewable investment and whether we're sufficiently focused on investing in companies that are really fronting into that significant risk. So Steve, I'm just wondering whether maybe you might talk in a little bit more detail about what we're doing in terms of managing and mitigating the risk of climate change.
Well, climate change is a real risk, and it's one we have to account for, and we are. In fact, the regulator, APRA, requires us to account for that. And we're making sure that we have investments which are sustainable and can deliver on the long term, because that's going to be in the best interest of our members to have sustainable projects going forward. And investing in companies that are committed to those projects as well. We don't want to be in a position where we have stranded assets, that is, assets which are going to expire and not provide those long-term sustainable returns for their members. And that's why we're accounting for climate change as a risk and making sure we have a climate change lens on everything we do across the portfolio, and make sure we achieve real change and opportunity as a result of it. And we're doing that for a fundamental reason, because it's better for the bottom line of the fund. It will mean we will have better long-term sustainable results by doing that. And that's exactly what we want to do.
Thank you. Justin, I have another question for you that's been asked in the live Q&A. What is the fund's outlook with future mergers down the track?
Yeah, I did talk about that in one of the slides there, Robbie, with respect to Media Super. And I said also that we think that potential legislative changes are going to hasten the pace of consolidation. But let me say this, we're not going to do, the board and the executive of Cbus aren't going to do anything that isn't in members' best interests. We know you would expect that of us, but it's worth saying. We are interested in further merger opportunities that are out there. Some of them are emerging. There's nothing live at the moment other than what we've told you about on the presentation tonight. But the advantage of them is that, of course, size begets buying power, which equates at the end of the day to higher member returns, and that's what we're interested about. But we also do not want in any shape or form to trade off this, really strong commitment we have to building and construction and the culture of our fund at the moment. So they will be our guiding lights, Robbie, in terms of merger activity in the next few years.
Thank you. And Steve, we have one final question that was pre-submitted by a member ahead of this evening. Now, we did touch in the presentation on our road to recovery theme in terms of our investment activity and really helping to boost investment in construction and in the economy more broadly, which is very important in light of the economic impacts of COVID. But the question from the member is, with all the infrastructure works in Victoria and other states, what can Cbus do to get more of the state paid works like toll roads, which are used by members and therefore of double benefit to all within the work that Cbus is doing?
Yeah, look, this is a great opportunity for Cbus. The infrastructure projects usually will deliver something like a 9 to 10% return over a long period, over a concession deed of 25, 30 years. And so it's a very good and sound investment to have because it matches the profile of our member and what they need. We're already invested significantly in a large number of infrastructure projects across the country, both directly. For example, in Western Australia, we have a half investment in Bright Energy, which has all the solar and wind generation projects in the state. We already have those investments directly, but we also have the capacity as a shareholder of the biggest infrastructure manager in Australia, IFM Services, of which we're a shareholder in, of investing in large infrastructure projects as well. And we've done that already. For example, we're invested through IFM Services in the Port of Brisbane, the Port of Botany in New South Wales and Port Kembla. And so we're big investors in that. And of course, we have holdings in airports mostly across Australia. Now, they're not doing too well now, airports, but they will pick up. And they have done extremely well for us in the past. But we'll be looking for those new projects. The member who asked the question, toll roads are a classic and a very good one, which we'd like to be involved in. And we have the capacity to invest in that either directly, because we now have investment capacity in our fund, and also through our holding in IFM Services. So, as I mentioned, we have Port Botany in Sydney, Port of Brisbane, but we've got more opportunity and we've got capacity to invest in others in the future as well. And could I add on social housing, which we think, as I mentioned before, is a good opportunity as well. Where the project we've got in New South Wales is, over $100 million, and we expect that will be replicated around the country in other parts of the country as well.
Thank you both. Well, I'd just like to invite, if anyone else has a further question that they would like to ask, to submit it, because we've answered most of the questions that have come in so far. Right, we're not seeing any other questions come in. So I would just like then to invite Steve and Justin just to make any concluding points that you might like to make.
Well, yes, well, could I just say it's a great pleasure to have the opportunity to speak to members through this annual members meeting. As Robbie mentioned at the start, we were one of the few funds that initiated an annual members briefing. We've done that over the last 4 or 5 years. Now it's part of the legislation that's required for all funds, and that's a good thing. And I think this engagement is very important as an opportunity to really find out from members what their major concerns are. And for example, last year, as Robbie mentioned, some of the issues that were raised last year we've addressed and going forward, and that'll be the case in the members meeting we've had here today. But we're very proud of Cbus. It's a great fund. It's one of the leading funds in Australia. we're going to have a proud future as well, and we're well placed to be one of the most significant funds in Australia going forward. And your support is extremely important for us to achieve that in the future as well.
And Justin.
Oh, I would echo Steve's comments and thank all of our members. There's clearly some on the video tonight, but there's hundreds of thousands of them out there in Australia. Thank them for our support. To say again how delighted I am to have taken on this significant responsibility, and I'm really looking forward to working here to drive what is a very, very strongly positioned fund serving its members well for the next few years.
Thank you. In wrapping up, I hope that you found this presentation and the Q&A section that we've had here tonight informative, and it helps you to understand the numerous ways in which Cbus is really delivering for its members and making sure that you can look forward to a better retirement. I want to remind you that a recording of tonight's presentation will be posted on our website, and also the presentation that we worked through this evening. If you submitted a question, we will email you and provide a direct response to your question in addition to the answers that have been provided tonight. I'd also like to remind you that we do have our contact centre and our advice line, which is available if you have any questions and would like to get some more one-on-one guidance on your super, or if you're looking towards your retirement and would like some guidance. We also look forward, and especially for those of you who are in Victoria like we are this evening, to being able to see you on site now that things are starting to open up again. And you certainly will see not just Steve and Justin, but also everybody else who works at Cbus. It's always a great thing to see members at work and to understand the issues that are important to you that Cbus needs to address. So thank you very much for your attendance here tonight, and everybody stay safe. Thank you.
Thank you.
Thank you.